hope you're all having a good and peaceful and prosperous and healthy Tuesday on what I believe is the 22nd of October, 2024, which I only state for those of you who might be watching this at some point in the future. And you probably can't tell, but I'm walking extremely slow and recovering from a bout with a bit of an injury and some food poisoning. Yay! Isn't that fun? But yeah, still alive and kicking for now, anyway. So what's happening? Well, Bitcoin has been doing pretty much exactly what the VEPS indicated that it would, as usual, because that's what the VEPS does. If you've been fortunate enough to see the live streams this week so far at Alpha Trading's very own Discord or on its Rumble channel, then you will have noticed that the targets that Bilbo called out yesterday and today were bloody well accurate. Biddy, for example, hit that center of the weekly range very, very nicely yesterday. And again today, a number of times. So around traditional market open, I haven't really looked at the assets since shortly after traditional market open, but it was around there last I looked. There are, of course, targets further to the downside in case it decides to drop. Again, I haven't looked at the asset in about an hour. Could have gone down, could have gone up, who knows? I'm not in front of my charts, but the point is, if you were sitting in front of your charts with the VEPS indicators on them, you would have a leg up in knowing which way it's probably going to go at any given moment in time. Because that is the whole point of using leading information. Hopefully you don't have lagging information on your charts, because that would not give you a leg up. That would give you the opposite of an advantage. Right? It would give you a mathematical disadvantage if you're using lagging information that is doomed to fail. Right? You don't want to do that. So use the leading info because it is available to you. Right? And in fact, if you didn't know, you can get that leading info or the basics of what you need to learn about how to use it completely for free. What? Free? That's right, free. How do you do that? Well, you go to the Alpha Trading Discord, which is at alphatradinghq.com/Discord. And you go to the request support channel. And in there, you click the button that says create a ticket. And in there, just say you want your free access to the volatility starter pack of indicators, and then tell us your TradingView username so that we can hook you up with those indicators, and we'll even give you a chart where they're pre-populated, and then you'll get access to the live chat with all the traders who use the VEPS indicators. And again, if you were looking at Bitcoin on the daily time frame or anything lower, or even the weekly, you will have noticed pretty much what I told you on Sunday in terms of the new week to expect. Right? You would have noticed that pretty much it has done what we were expecting so far, moving along with the targets. And if you'll notice, I said to you that if it can manage to stay above the third standard deviation band to the downside of the 3012 RMLR on the weekly time frame, well, if it can close the week above that band and never touch it during the week, and do the same thing again next week, wherever that band prints, well then, the week after that, which will now be 5th of November or 4th of November, something like that, then on the 4th of November, starting that week, the asset would most likely be in mean reversion to the 3012 RMLR, which is currently at 100 and whatever grand. 105, 110, I forget the exact number. It really doesn't matter, right? Still hovering around the 100K mark, plus minus. So whatever amount it would go up to, if it were to climb up there, even from where it is, 35K move, 34K move, 32K move even. It's a sizable move. It's almost a 50% move from where it's at, just to get to 100K. And were to go to 110 or higher, obviously that would be even more, right? So significant moves are in the offing, but again, we don't trade the weekly time frame, right? We trade low time frame VEPS information because that's where the occurrences of opportunity are. That's the way to make sure that the probabilities and statistics stay in your favor, even if you happen to be running from a rain of rockets at any given moment in time, or mortars, or UAVs, or gunfire, or who knows what. Hopefully you're not, but we can't all say that we don't at all times. Unfortunately, human beings still have conflicts. And it's one of the dumbest human activities, to be honest. But it is a real human activity. And so on that note, I really hope you all stay safe. Now, let me just mention, because I put it in the title and you should know about it, the SPY. SPY recently had its forecast analyzed by some analyzers, who said that based on the analysis of the past 100 or 80 years or so, whatever it was, 70, 80 years, they looked at the performance of the returns on SPY for the last 7 decades. And they saw that, according to their fantabulous forecast, that they think the next 10 years are only going to yield around 3% returns per year. Now, compare that to the average, 13% over the last 70 years, right, or 7 decades. Now, it has not been 13% in each of the decades, obviously. That's an average over the last 7 decades or so. And if you look at what the actual amount is per decade, obviously it varies even quite significantly. But let's just say the 3% is obviously considerably lower than an average of 13%. Right? Stocks do a couple of percent, like boring stocks that don't do anything. We'll do a couple percent in a year. So if your SPY index fund, which is supposed to be top performing assets of the markets, are only pulling whatever it is, 3% a year, Houston, we have a problem, as they say. Why do I mention that? I mention it because there's a greater than zero probability that during the next 10 years, if the assets market of equities traded on the S&P 500 reach an average index results of returns of 3%. think about what that means for the assets on the S&P 500. It means that there's going to be a lot of them whose relative, I don't know where that ended, but SPY, if the results of SPY are only going to be 3% on average, it means that the average asset on SPY is going to be yielding much lower returns than it used to. So, what does that tell you about the future of the markets? It tells you traditional markets. By the way, these long-term forecasts are things that you can generally ignore, especially, obviously when it comes to trading. They really should be ignored because a 10-year forecast is not really useful information. But just on a bigger picture, to think about the macroeconomic picture, what it means that people are going to be looking to traditional equities, traditional stocks, if you will, for returns at lower than current expected values or lower than current expected returns. Meaning people are going to expect the returns to be much lower, much worse than they currently are. How is that useful information? Well, it means if they want higher returns, they got to look somewhere else. Well, what currently yields higher returns than the S&P? If you guess Bitcoin, you're right. And it's been doing it for 15 years, right? Over the last 15 years, Bitcoin's generated something like, whatever it is, 14.2 trillion or 14.2 billion% returns from when it was at zero until it's high, right? Like some insane number. Right? There's nothing else like it. Sure, other cryptos have also done fantastically well in the millions of percent or hundreds of thousands of percent over a short period of time, relatively. But Bitcoin's really the one, right? Let's not kid ourselves. So, what does that mean? Well, it means over the next 10 years, there's a very high probability, or at least a greater than zero probability, that we're going to see more people put in their risk on Bitcoin because they believe, and probably rightly so, that it is going to be a worthwhile investment. And only time will tell. And to all the people that say crypto is a scam, crypto is a fraud, the only thing that can happen in crypto is someone loses. Well, I mean, if you've ever lived on it for years at a time, you'll know that Bitcoin is not a scam. And tons of people still say to this day, Bitcoin's a scam. No, Bitcoin is not a scam. Bitcoin is a mathematical protocol. Are there issues with fees? Are there issues with on-ramping and off-ramping? Yeah, sure. But Bitcoin is not a scam. Okay, it is a mathematical protocol, which is a form of currency and a network that secures itself and allows for the transaction of the currency or the property to happen. So Yeah. Anyway, that's just my opinion. Read the Bitcoin white paper. I highly recommend it. Be happy to speak with you guys if you want about it in the Alpha Trading Discord. And that's it for now. See you later. Happy trading.